Good morning, guys. Good to see everybody's having a solid breakfast this morning. Looking at the comments, Bitcoin had its coffee this morning too, giving you guys a little morning dump. We're gonna go over the price action, go over the order flow, might look at the DXY a little bit, talk shop. Obviously, the thumbnail is always clickbait, so for those that are wondering where that picture came from, there was like some environmental forum out there that put out a report that Bitcoin was bad for it, and that's the image they used, so that's why I used it. Doesn't need their approval to do what it wants to do, right? So let's get into it. Max, anything to add before we go?
All good, mate.
All right, easy enough. So you can see that I've got very few levels on this chart. We're going to keep it very simple and clean for those of you that are in here. If you were in the members live stream last night, you already have downloaded the data, so to speak. But we talked about the previous week open being a pretty important level going into last week, and that we would continue to monitor it because we know that it's going to be an important level. So you can see that as of right now, we've come up and back tested the previous week open at 28,048. See right here, this is the opening day of the week, and it's pretty much a perfect touch. It literally hit 28,048 on the dollar. So that was the key level from last week, and it remains pretty important this week just because you can see from a structural standpoint, if you're above this, what do? We try to go test the upper bounds here, that 28.7, 26.50, that value area low of our old range from over here, and the key low from the summer, right? So if we crack that level, while I am, again, monitoring 30K, if you guys watched me on debate or you've watched me in the group, I do think that we probably head up through this level over time if we crack it, and we probably head up towards like 32, 33. It just doesn't make sense to stop right here, but it does have resistance. So if that occurs, the upside is fairly easy. The downside is, in my opinion, also easy, but there's more scenarios to work through for downside, and we are at resistance. So again, you'll never catch me telling you to buy up here. You'll never catch me telling you to buy anywhere, really. I don't do that, but I do like to lay out scenarios and ideas. So you can see I've got very few lines. We could use the yearly pivot, the 12M1 here, as key support at 26.724. You could use the wicks here down to like 26.5, whatever suits your fancy there. But you'll notice we have this breaker right here on the daily. Okay, so 27.202.50. Anyone that's been following me knows how much I like these. I've been using these since like 2020 in my breakdowns for you guys on YouTube. So it's one of those where we continue to do so, and it's a good level. So you can see that you've got this like daily settle up here, and then you've got the no daily closures below this line. So if we reach this area and start closing daily candles beneath it without recovering it, well, I do think we probably head down to back test our range highs here, which you can see I've got a pretty wide box. You've got everything from 25 to 11, which you could realistically mark this at 25.3 potentially. Then you've got 24.7 and 23.967. And on a wick basis, I would be A-okay with a wick into here if we recover the levels and we're not living below 25.2K realistically. Let's take a look on the weekly, and you can see here why that is, right? So again, we really want to be hanging on to this level here, 24/7 on a weekly. And that's so far away, it's almost not worth talking about. But again, the upside is easy. We get above, heck, even this weekly high right here at 28.5, 28.487, you get above that even, and I think that there's a good chance you'll at least make a new high and maybe push onwards to these upper targets. That's the easy trade. The best trade is continuation for Bitcoin if you're a bullish. If you are looking at things from a little bit more of a bearish stance, you can't really be too bearish on this until we're back below 26.7, 24.50. You give this up, and I think you get the back test of our range. And then it's a question of high time frame closures like weekly candles. Do we close below 24.7 and 24,000 respectively on like the monthly here? So now you can see that we'll move this over, and this is our monthly breaker. So that's where the support is at. Those are the levels. Now, Matt, in the group during the live, he kind of front ran my analysis a little bit. That's okay. Was talking about this level here. So if we break back below that 26.7, 24.50 level, there is a chance we start heading towards the gold pocket. And the reason that is you've got your 23.124 at the top of the gold pocket and 22.8, 22.50 as the bottom, which we already know is the September high, right? And that was our key level for so long right here. Very clean, very good. We also have the 6M1 just beneath it at 22.407, if I recall. It is somewhere on here. There we go, right there. This little box was absolutely clutch for getting this range and move up, right? So not bad levels to have, but this gold pocket is important for another reason. If we start looking at things in terms of data, right, as far as ranges go, let's get out of the daily time frame here and let's go down to like the crack, so to speak. And we know that March ends very soon. And you can see our POC is way down here. And you can also see if we're breaking back below the 12M1, you're well within the March range, which is extending up, you know. And if you're looking at this from a price standpoint, you're looking at this high volume node that's forming up here in the monthly time frame saying, is this going to give us that elusive continuation shape, right? Where you have this nice P shape. So we do need to be hanging on to support here as we are consolidating up above price. There's gonna be a lot of people calling this a diamond. There's some people calling it a triangle, I'm sure. You guys both know, or everyone in the group knows, that I prefer to use horizontals and ranges. And if you want to draw this as a triangle, I think you certainly could. And all that's going to do is give you the idea that when a move might be coming, right? So we are looking at this as if we lose the 12M1 here, let's say you're drawing this up like so, and you're convinced that this is a triangle of sorts. Let's get rid of this, which, you know, there's going to always be a guy in my comment section after the video going, you don't see the diamond? And I do see it. I just don't care about it that much. You know, people are going to be drawing this, and they're not incorrect here. You are consolidating into a squeeze, meaning that eventually this is either going to break to the upside or break to the downside, right? That's what you're looking for. It may do something like this. It could even do something like this. You know, those are the trades that are available in that regard. Is you're coming into support, you want to trade support for what it is. If it breaks down, you're just watching to see if we can reclaim a key level and go up. Otherwise, it continues to the targets down here, which would be our next horizontal support, also volume target here. Now, again, why I say on a wick basis is because this gold pocket and your monthly point of control come in here. So we know that we're probably going to have an NPOC. It's nowhere in jeopardy as of right now of being shifted up, at least on the 40 tick here on TradingView. I've not checked Exocharts, so I'll leave that to Max to go over what the monthly POC is on Exo. If it lines up, that's always best. And then we go out to the quarterly because we simultaneously will be ending the quarter. And you can see that the overall quarterly POC, which definitely is not going to change as well, is coming in just above that monthly. So this gold pocket then becomes an area of interest for me. And if we start looking for, do I have future pivots on here? Come on. We start looking at future pivots. Well, we can say that, let's show the quarterly and the monthly. You can see that our monthly here is at the top of our structure, implying that if we break down, we do have a take profit one here because that's going to be the average from March. And then all the way down here is your quarterly, letting you know that this box is important. However, a wick beneath it is not out of the question to fill these in if this area is recovered. So again, this is not good to break below this box, in my opinion. However, if seen like so, we can definitely take this trade and take it up. I would take it all the way back up to the range high at that point, right? But if that is not recovered, you're now living below your pivots. They're monthly and quarterly pivots for one thing, and you'd be well within the old range. I would think that, you know, if we lose 22.810, the September high, and that 6M1 at 22.407, you know, this like zone right here, let's get rid of our gold pocket. We'll put the horizontals on. We all know where the gold pocket is now, and we just have the extra confluence of what we're trying to look at, right? Maybe we will. There we go. And September high is somewhere in here. There we go. Right. So look at how those line up nicely with our POCs, that gold pocket. This is the zone that you have to be careful in, right? Very, very simple. If you lose this area, I mean, the odds of leaving this low are pretty unlikely to me. I think at that point, you're probably targeting all the way back inside your overall range, which this would then look like, a big trap. Let's get rid of March and the Q1 as my trading view is absolutely dog shit this morning, right? So you can see what would happen if we break back into this. And then I'm just looking at this as the potential to have been running basically. Nope. Don't need that one. We don't need this one. I feel like I have it somewhere. If you guys are patient enough with me, I'll be patient with you. There we go. We'd be looking at it like so. And let's go ahead and box this off so that it makes complete sense from a viewpoint standpoint. So you can see why we don't want to be giving up this zone of support now. And you can see that we would be targeting the POC of this overall range, in my opinion, which does put us all the way back down around 20K. And I'd be looking to take this low into the value area low personally down here at 18.8 and 18.7. No bounce there. And you can see where our next area of interest is. It's essentially the yearly open, in which case, if you did that, I would almost expect to see new lows. We can't get too far ahead of ourselves. So again, guys, all we're doing is mapping out the high time frames and just setting ourselves up for success should there be any fuckery with this move. However, you are consolidating above key support at 26.724. None of this conversation matters above this level. So it only matters that we have a plan in case, just in case. That's it. Just in case. You should always have a plan, right? Yeah, you're definitely going to hear diamond. And you know what? I don't trade patterns. So maybe it is a diamond, maybe it isn't. It doesn't matter to me. What matters to me is actionable trades and reactions. So we'll be reading the reactions off these levels going forward, seeing what's going on, seeing if we can get good positions to trade intraday, right? So if we're going to trade this intraday, you could very easily wrap, I would say, let's just do it like so. Yeah, look at that. So there is your breakout. There is your range. You're at the value area low at that 27.20250 level we just discussed. So this would be bounce territory for me. If you're drawing this up as a triangle, a diamond, whatever, this is also the support for that area. If lost, well, I expect to formally test 26.724, and then I would be looking lower over time if lost. And so again, really need to be living outside of this range. A wick down into this region is not out of the question. However, anything beyond a wick and start living down here, it's not going to look great. And, if you're looking at this from a structure standpoint, right, what do you see? Never breaking structure. If you came back down into here even, this is still technically a higher low. However, the moment you put in that lower high, you do something like this, that's where you can make this move all the way down. So that is what you have to be on the lookout for. Until then, you have plenty of levels to trade in between, in my opinion. And that's what I plan to do in the meantime. So if you were long in this region from down here like me at the 16.6 region, or if you got long here, or if you got long up here and you still haven't taken any profits, well, I would advise that you do take some profits. Pay yourself a little bit. Don't waste such a good trade. For me, that means getting out of, I call it deleveraging, taking incremental profits on my leveraged positions, which I put right back into Bitcoin so that I can enjoy this move up, right? And then if we get up here and I see the need to hedge, I'll hedge short so that I'm not exposed and ride it back down until there's a sign of strength, or just continue to hold that position as I'm going to need to so that I don't, experience too much drawdown. So that's really the Bitcoin chart in a nutshell. It's kind of a high time frame Monday for you guys. I don't want to do too much else because, the low time frames are fairly well explained. There's only two levels I'm interested in, and they're about $500 apart. And then after that, we've got the big supports that I really would be interested in bidding. If the reaction was favorable, that's going to be the key. Is, do we get a favorable reaction? What are we looking for? Recognizing the structure on the chart, right? So it's not out of the question to make a move down into this zone. We certainly have pivot averages here and the Points of control from the quarter and the monthly will be there as well. Yeah, I think that's about it. I don't think that there's much else to discuss. Keep it fairly simple for you guys. Anyone that trades ranges probably has a very similar plan, I would hope. But yeah, let's see. I don't know if there's any questions. I'm going to turn it over to Maxwell here. Let's see how far along we are. 15:30. Perfect.
Okay, all good. Yeah, so I've actually, from the members update, I'm going to update my analysis, which I gave yesterday. And it is, I'm actually on the 15-minute here. And it's purely because today I didn't, obviously don't trade at the weekends, spent more time zooming through this chart after I mentioned, the huge bullish divergence that we've been having since, let me turn the rect off because that's, but yeah, if you ever want to put yourself off leverage, just turn the rect on. Wrecked. So many people. But yeah, from this low, we've just been having huge bullish divergence the whole time. It is on a high time frame. I really dislike trading high time frame divergence because when you're in a short term and looking at particularly CVD, you think, okay, you've got you're correlating it to one direction. So in this instance, you look at it, and let's say this was within an hour. So I'm looking at this line here, and let's just say these two lows were within an hour. You can kind of determine, okay, there's someone really absorbing the market one way or another. But on a higher term time frame, you're kind of looking at it the other way. It's clearly you're getting a lot of selling pressure in this region, which it's a good spot to be selling. The issue, and really zooming in from the analysis that I gave last night, when you look at all the huge open interest drops, not really since this high, all the big ones, other than this one here, actually including this one here, all the big open interest drops are coming on negative, really positive delta. So what does that tell you? Well, it tells you that what happens when you get a lot of positive delta on decreasing open interest. It's shorts getting wrecked. So you're getting shorts getting wrecked here. Huge volume on that. Negative, 20 million, about 20 million open interest and negative delta. The next one was over here. Another 20 million combined, actually just over. And then overnight, actually just before the stream, but I really didn't zoom in and look at all these things. More shorts getting wrecked, and even there, positions changing hands. So, my analysis last night was a bit incorrect because I really needed to zoom in and understand that I am looking at a high time frame CVD analysis, which is different to low time frames, if you ask me. But yeah, a lot of selling taking place and shorts getting wrecked and shorts getting taken their positions over. So, that does make it more bearish than, the way I was looking at it yesterday. But, it is still bullish divergence. But zooming through and looking at it, it's a little bit more bearish, is what I'm trying to get at. But yeah, it was actually really slow for the majority of the day until a couple of hours ago. The trade that we gave last night on stream really played out. It actually washed through the gold pocket a little bit. It's going to do the full ones, which is annoying. Just give me the classic fib. It did wash through it, just a touch. But then came back and back tested because the weekly open at that time was in this region. So, really nice, clean setup. I didn't get it, but I did take the SFP that we had earlier. But unfortunately, I got taken out of it. I moved my stop loss too quickly. I took take profits and got stopped out when it came up here, which is frustrating. It was just an error in stop loss placement. But yeah, right now, on the low time frame stuff, we are in an area where one would want to long. You've got an SFP region here. It's the value area high for this month. So, it's a really key region on the charts. And, just looking at it, let's go to the 5 minute where we can get a better analysis. You're getting a delta switch up. You're going to have some trap shorts here. It looks pretty good. What I will say, though, because, though this is a box where one is looking to, we're looking to take a long, I would rather we take this low, to be honest with you. Just personally, I'd rather we take this low because we've already bounced from this section. I'm ignoring this one, but effectively once, pretty much exactly. I would rather we take the low and take all the long liquidity out, really. But right now, it's looking pretty good. So take profits quick if you have taken this long. But I would be looking for that SFP personally. But let's go to the monthly, because cool thing that you can do with Exo, and I know that Magic mentioned, I go and have a look at it, is if you've got the volume bit on the text point and then you've got the volume profile in. So we know that TradingView is around 40 ticks. It's not 100%, but it's around 40 ticks. So we can zoom in to this and we can really see how much volume is in that $20 range. So the point of control, there is currently 241 million. So for that to be changed, it obviously needs to come up here. And the highest one we have up here is this one here, which is 180. So with 1, 2, 3, 4, 5 days left, could it put another, 60 million in this $20 range? It could. It's just got, price has just got to linger pretty much exactly where it is for the next few days. And then you're going to get the point of control value area all shift up here, and it would probably look a lot different to what it is now. I'd imagine that this would be the value area low and the value area high would be at the top. But yeah, that's it's got put in a lot of work in a pretty small range, and given the time frame, I'm not 100% sure that it's it's going to flip up. But it offers a really nice region on the charts to trade for now. Being the value area high, and if lost, we can look for the shorts. But yeah, right now you can't really look for shorts. It's a longing region. It's where you want to take the long from. But yeah, it's been a pretty good bounce so far, but I would expect this low at least to get taken. Shorts, really, I think you've got to be patient on them now. You've got a untapped level up here, up around the Q3 pivot for last year. So there's an untapped level there. Is there a gold pocket or anything in that region? No, because we came down here. Not a fan of that one. Yeah, there's not really anything to go with it, but it'll be a strong level and you could trade it with an SFP, but it's got to put in some work to get there. Traded something like this. So previous day high, swing fail, into that pivot, as well as the untapped daily level that we've got there. Where is my short? There we are. But yeah, really, you got to be looking for longs here, but it's just you got to be cautious, because if it does start to lose these regions on the charts, specifically the pivot, which Magic mentioned, it's pretty bearish. But at least you know where you're wrong in this trade quite easily. But yeah, not really too much to go over. Oh, I do. Telling a lie. We have some single prints right now. So, this could come all the way back up to the previous value area low. I need to refresh this chart. But there is a really nice single print there. So, this bounce that is currently getting underway, could come all the way back and close this single print if I open this up. Expand the candles. Ugh. It could come. I would actually argue it's right up to this low. I wouldn't really consider this thing. So, you've got quite a way to go. What's that? $200, nearly $300. It's over a percentage trade right now. So, yeah, right up to here. Yeah, so it's got a long way to go. You've got PVAs to the downside, which we know like to get filled. So, it's not the most bearish looking chart right now. Just from TradingView, and the fact we've got the single prints and the PVAs there. So, it has got room to come to the upside here, but don't forget that CVD divergence that I mentioned at the start isn't the best on a high time frame. But yeah, I'm pretty much done, Magic. Not really got too much else to say.
My word. All right. We are getting a little bounce out of Bitcoin here for those that are paying attention at home. Coming into the region of the chart we were just discussing, 27,202 being that key level. It's at 27,235 on the low of it. So, not a place to really be opening a short, as we've discussed. Now, I did put it in the title that we are going to discuss the DXY chart a little bit. So we will definitely do that. Might as well look at the DXY. And, I'm going to put this up there. This is from iStack, Crypto Low Key. It's public stream. Don't be a looker. Smash the like. We much appreciate it. As I told him, looking is for free. Touching will cost you, though. We'll go ahead and get into the DXY in a second. I wanted to show you guys what I'm looking at in terms of regression. So I track these based on trend, their custom settings. And this one's still not complete. Obviously, it has 3 days left, but it's fairly close. And you can see this has been for the entire year so far where it opens. Pretty good idea of what's going on. And you can see that where do we break our trend is below the regression at this point, which is also this box we outlined for those key swing fails that we don't want to see lost, right? Then this all looks like a giant deviation, and that this looks like I said it wasn't the blow off move last night, but again, the more you look at this could be a very quick blow off move. But we have to trade the invalidations. We can't trade what we think we see in the chart. And those are just opinions at that point anyway. So I did want to show this because it does line up nicely with our levels. It lines up nicely with the invalidations we've set forth for the range. So if we lose the 12M1, what are we looking to do? Come down to the low of our regression, right? Into what? Support that we've already identified, back testing the range high, things like that, yada, yada, yada. So keep an eye on that for those that are in the group. That's one I'll be watching for the end here, along with those pivots that come in, and any NPOCs will be forming in that region. DXY, let's go over to the DXY. I've not looked at this chart since last week. We had a really nice bounce out of this region, and we still have that key support there. So you have come up, and again, we talked about this. You've swept the high right here. You came up, you took the local high, perfect SFP, and a little bit of a dip, on this move from 103.37 down to like 102.91. If recovered, I expect a formal test of this region, and then, we start stair stepping it up. And to me, the, yearly pivot, while key, really kind of, I start getting my eyes, if we regain this level, I start really pushing my eyes back towards 104.775. If we got to like a monthly, you can see this is a 6-month level right here, and has been fairly important to close back above in terms of high time frames. We'll go out to, let's go to a weekly. You can see right here, good respect to the level, support before giving up, basically close the weekly candle beneath it, letting you know it's resistance again. Tried to close above, couldn't hold it. What happens when you close below it? You move down. So this will be an interesting week for price in terms of the DXY. It could spend a couple weeks in this area consolidating, and it wouldn't be a bad thing for the DXY chart to consolidate between this blue box here and this blue box here. So we shall see what happens with the US dollar. Obviously, a move back to support probably bodes well for another leg up to Bitcoin. However, if you don't get that and it starts going up, then we probably have found at least a local top on Bitcoin for a little bit, and it may spend more time putting in a bigger consolidation, or maybe it just dumps back in the range. We don't know. That's why we've formed our plans so that if we see any of those scenarios, we're prepared. But not good for Bitcoin if it starts moving up through this box. Not going to be good for risk on assets. It would make me look at this as this 6M SFP at 105.788. You can see the bottom and a second higher low into that resistance potentially, in which case I would expect to see it broken. And then I would expect to see 106.942 and 107.645 respectively. And then you could even target the gold pocket up here. So that is the bullish case for the dollar, which a lot of people are very bearish on right now, talking about how the rest of the world's trying to move away from it, which, there's some truth to that. Of course they are, but it's been easier said than done over the past decades. So we will see what happens in that regard. So fairly neutral on the dollar here, even though I know someone's going to say it. This looks like a head and shoulders, but these are like the tiniest shoulders I've ever seen. He clearly skips shoulder day, never does any delts. So I'm not a fan of that outlook, but we trade what's in front of us. So you lose this box, it validates this whole idea. And I'm expecting that move all the way down to 96.5 in that scenario. So if you start breaking below back into this range, I would like to see 96.5 coming in, or you could just target these lows right here, right? So there they are, boom, at 97.68. This is where I would start really eyeballing price in this little like 1 cent area, right? He skips gym day. Yeah, it just skips the gym altogether. But this is kind of a messier chart than I'd like. I could probably get rid of this and just say that box to box, if you break this box, 104.775 is that trigger for another back test of resistance here, in which case, barring a swing fail, I would actually be looking for this to move higher over time. That would probably imply no money printing and would imply more rate hikes, which 25 basis points is the estimated for the next one still, I think, in May. So a lot can change between now and then. One thing I would really prefer is if Bitcoin did get continuation here and we make that move to like 30K, 32K over the course of a couple months. That wouldn't be bad, up into the sell in May and walk away. And that would be setting up very nicely for that there. However, I do want to draw your attention back to last year in March. Where did we actually put, everybody says sell in May, walk away. And we had dates for that as well. You can see there's the dump. However, the top that was put in before putting in, this larger structure came in on March 28th. So anniversary is tomorrow. That doesn't mean we're going to put in another top. It just means, be careful. That last week of March is where the top actually came in before putting in a distribution and then selling off a few months later after, I wouldn't even say chopping investors around. This looks very reminiscent of the 69K high where it came down. Didn't really give you that back test to get back in. There was no back test, right? This is as good as it got. I botched my plan as I did take this short and I took profits at the yearly open, which was 46 to something. It's right over here, actually. Yeah, 46 something. 46,195. Damn. Took the initial profit here, went to get back in, missed my entry, and then was like, oh, I'll get another chance as this chops around, dumps out of the range, and I was not able to get back in until this cycle right here where it did finally put in a more formal range, and then rode that all the way down. So just remember, sell in May, walk away did not take place till here. The top was already in. So if we start seeing signs of weakness, like dumping back into the range, which for this one was 44.8, if you guys recall, 44.8K was the range high, if I remember correctly. That was your value area high right here. Okay. And it was also the B leg of our Gartley that we had set in. Right here. Okay. So you had this pattern at play and you then had really nice timing on it as well. We're not going to get into that, but you had this as your B leg. So not only was your value area high here, you also have the B leg. And what did you do? You held on, then came back, no formal back tests before moving on. So just remember that that was at play and that is always an option. So if we see something very similar to that, where this starts moving out of this range lower and into this area, you could expect the bounce. However, that sign of weakness is getting back into this old range and living there below that like 24K level, 24.7, I mean, if you wanted to be super aggressive, just losing the yearly pivot to me doesn't look great. It looks like it wants to come down and hit some of these key areas. And then it is a question of, was that the top and is it going to go sideways and down until May? And we see that, that dump Ola again before lower prices. And if you guys have been following me, you've heard me say, if Bitcoin puts in lower prices, it will be the second half of 2023. That's just the way the math is working out time-wise, because nothing goes up or down in a straight line. If it did, things would be very, very easy. And the markets are definitely not easy. So Gartley again, yeah, that would be wild. I don't actually know of any. I've seen some people posting the cipher here. I don't trade ciphers. I don't think that they're valid harmonics. I know that's really unpopular to say for some people out there, but I do take the stance of, what's Scott Carney, and he doesn't validate them either because he's the father of harmonics. He created them. It's not a valid pattern according to him. So I don't put as much weight on them because they do get faked out a lot. So a little education while we're here is I believe we had a cipher here. I feel like this was the cipher I'm referring to. There was a really big one that everyone was watching right here. And you can see exactly what happened to this bad boy. You got the completion, down she goes, and just this isn't the place you're looking for a bullish cipher anyway, at the top of a 65K rally on Bitcoin. But there were a lot of people that were trading this for continuation. And while it was there, you still could use the pivots on it. I will give them that. You could still use this right here. There's your B leg, right? And look at that. Boom. There were even people that were saying this wasn't the cipher and that this was. I would highly disagree. But this would be your cipher, and It did give you a good bounce back to about the gold pocket. I think it went a little past it. It certainly did. And then once you gave up this B leg right here, you had to know that you were going to make a new low, and back test this came. And well, if you weren't short already, you should have been. We were looking for this play right here. I could pull it up in my journal, I'm sure, but this was the we called it the Richard shark. It was off the back of a 5-0 that actually formed right here at X, and then a new one formed up here, basically. So it was a very interesting pattern, and we were looking for this low right here to be taken at 28,829.50, and obviously it was taken by about $50. So that was the target, was a full rundown of the prior pattern, and the key to that was going to be, actually, I think it was looking like, was it looking like this? No, this isn't. I don't know if that was it or not. Now I'm going to have to go back to my folder at some point and do this one. I do believe this was the one I'm looking for. Yeah, and this was that key B leg for, again, another really key area. It was also your one-to-one. Lots of people wanted to play this. Sorry, now we're going through historical stuff. I know that everyone's tuned out. Everybody wanted to play this one-to-one, and the one-to-one was really nice because it was a one-to-one in time as well. There's a 618, excuse me, came in here. Let's get rid of this. Oh, Monday mornings, the high time frames are fun, aren't they? So you can see you have your one-to-one occurring at the 618. So it was a very quick move into this support and just no reaction at all out of the 43,017. So we knew that if D was lost, which was the completion zone here at the B leg of our new pattern, we were looking for X, which would have been the beginning of the pattern, to get that low taken right there. So that was always the goal in that. So as far as the cipher goes for the upside now, we should take a look at that, I guess, and consider it. I would imagine they're probably pulling. Oh, I'd have to find it on Twitter. You guys know how I feel about Twitter analysis, though. I imagine it's coming in somewhere here, like so. And they're probably calling this the cipher here, which I think it meets all the requirements. Pretty close to, yeah. Pretty close to, which would imply the B leg is the most important leg, right? And what did we just talk about, 25.2? So you could certainly use this analysis on just a horizontal basis. You could say this B leg is important, that if lost, we just talked about losing the B leg over here, right? If you guys recall, we had the B leg right here. You lost the B leg, what happened? You got a dumpola. So you could very easily apply that same theory to this. If you lose this B leg and there's no reaction, just like we saw over here as well, right, on a bearish harmonic. So to give you a better visual, you've got your B leg and you'd be back inside your range, and it would give you that shades of not good things happening for Bitcoin, right? That's how we'll word that. It would give you this little zone where once lost, sell off. So again, top of the old range, you don't have to do anything too complex, but it's always nice when other forms of TA start validating our support zone and idea. So again, we lose this little white box here. You lose your trend. You're also losing the B leg of a potential harmonic. Me personally, I don't really play too much with ciphers, but this one lines up really nicely. So you are getting that move now as well out of this zone. You've got the bounce here, and now I'm moving back below the low into probably this area of the chart if it can't reclaim some of these lows here and push higher. So until previous week open is reclaimed, I remain neutrally bearish for the bottom of this range as well. So that's where I'm at. Cipher is a harmonic pattern. It's kind of derived from the shark pattern. Traders started using it after Carney had already released the shark. So I don't personally trade with it, but the analysis lines up nicely with other analysis we have. I like to use harmonics to validate one time sometimes, but also pivots in the market, which for us, this is a key pivot, and that is validated by that harmonic as well. So you could certainly try to trade it. Nothing wrong with doing that. And I know we're not RSI guys here, but this is not a good look on the RSI. Getting rejected up here and putting in that lower high on a higher high. So you definitely have bearish divergence on more of your traditional oscillators, would be curious what the weekly looks like, because that's where I like to spend some of my time here. You can see I've drawn one line on the weekly, so we know exactly where I feel about that. And yeah, you've got bearish divergence. So yeah, this correction is probably going to get underway at some point, I would imagine. And we're probably going to test that B leg. I would imagine we see this zone after doing a little bit further analysis with some different tools here and different strategies. I do think that there's a good chance we come down and see 25.2 at this point. So be careful if you are taking these intraday longs in this region. You can certainly do so. The bounces are going to be there, but I would make sure that you're paying yourself anytime you're long up in this region of the chart. After a move like this, you got to think the risk is always greater. So your reward is going to be less and the risk is going to be higher. So taking profits, if given, are going to be key to having a successful position gain. So I'm not buying in this region. You guys know that. It's not what we do here. Gonna trade this area if given, and we'll go from there. So this has been going on for about 40 minutes. There's 25 of you still in here. Yeah, patterns, they kind of all look the same. But yeah, so be careful out there, guys. Trade the levels. We lose this yearly pivot. I am looking down to 25.2, and that really is that key inflection point in this move right now. If this gets turned into to resistance, right? This ends up resistance at any point. This trend can come all the way back down into these areas of the chart, and we could put in that larger range still, and it wouldn't look great. I'll say that it won't look great. But that's enough rambling from me. So let's keep it kosher at 41 minutes here and move on to tomorrow. We'll be in the group trading. I'll be flying out Wednesday, so I won't be available for the live stream on Wednesday. I'll be on a plane, so Max will have to hold it down. But I will be here tomorrow. My flight is on Wednesday morning. I'll be in flights all the way till almost 4 o'clock that afternoon, so I won't be around, but all good. Max,
so
anything you want to
streaming?
Yeah, definitely. So hopefully you guys got something out of this. Even if you feel like you learned something, do me a favor, smash the like, leave a comment, all that stuff. If you're watching it back and you have questions, or you did feel like you got something out of this, the only way that I know that I'm doing a good job for you guys is if you hit the like button and interact with me in the comments section. I love getting comments. It's one thing I'm working on getting more of, is comments on my videos. And Max, with the plug, as always, he loves throwing that up there. Join the Discord.
Why do you have to say it like that, man?
Yeah. No, join the Discord. If you guys like, scan the code. It'll take you to leadingcrypto.io, where you can also get in the Discord. If you guys are interested in educational services, you may also find them there. Harmonics, I need to set a date for the first stream. I want to release those, but I want to do them as a classroom setting so that people can ask questions. So they'll be more like a live stream, but I do want them very focal. So the presentation itself needs to only be about 10-15 minutes so we can upload that to the website. But then I do want a section for there to be questions asked, so we can easily separate those two through editing. Not hard, just download it and cut it off. So let me get that going. We just did traditional markets on Friday. Maybe I make Friday night my classroom. How am I seeing this dump? Looking down, Gary. If you go back just a few minutes, we're probably looking for a back test of this region of the chart, and that really becomes a key inflection point. You've got a lot of mean reversions coming in much lower as well, like the monthly pivot, the quarterly pivot incoming. You've got NPOCs down here. Certainly, again, not a place to be looking for risk on longs in terms of outside of intraday trades. And I would just be monitoring the order flow if I was looking for an intraday trade here. But lose 26,724, and I think 25.2 down to is maybe even as low as 23,967 is coming at that point. So, be careful with that. Yeah, we might see it very soon. So again, I said at the beginning of the video, the thumbnails mean nothing, guys. They're all just clickbait. That's all they are. I'm just trying to get people to click the thumbnail and come in and actually see real analysis. So you guys know what it is. But all right, I'm going to jump off here in the stream. We will